The S&P 500 is approaching very critical resistance as we're heading into a typically very volatile month in the month of June. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Really quickly, don't forget I'm running a Memorial Day sale for 50% off bank trade alerts and the Stocks Channel Trading Discord community. You can find out how to take advantage of that discount by clicking on the links in the description of this video. All right. So Friday SPY was up 1.3% and it was on increasing volume. So we're either starting to squeeze out the shorts or we're starting to see real organic buying in the S&P 500. Now that doesn't go without saying we're reaching very critical resistance, and if I zoom out here, you can see we are approaching the August 2022 highs, which is up there right around SPY 430. Now on the way to 430, we do have gaps to fill at 421 and 425, and as we know, gaps do typically get filled, and it has been a very long time since those gaps were opened. So it's very possible we're back on the path higher to fill those gaps. So I'm starting out with this very zoomed out view because I want you to understand how critical this zone is going to be between SPY 420 and 430. I do think there is a good chance we're going all the way up to 430, even if it takes a long grind and a lot of time to get there, because we do have the bullish breakout on SPY above 417. It is very likely we have the market structure to push to those higher prices and test it as resistance. Remember, there's a lot of patience and discipline required in the market, and there's a lot of bearish sentiment still around the stock market right now, which means we do have the fuel to continue to grind higher as people try to short a bull trend. It's very important you understand you should not be shorting bull trends because the path of least resistance is higher. That's the reason we have the bull trend to begin with. Even if we climb the wall of worry, because there are plenty of headwinds, and even though we are in a very volatile month of June, it is possible some of those other sectors in the S&P 500 can push SPY to these higher prices. Now, once we get to those higher prices, there is going to be significant risk to the downside, and I'm going to talk about exactly why. And I want you to focus on the gaps we have above as well as the gaps we have below. So now I'm going to zoom in on this chart so you get a better idea of the price action we're currently dealing with. And there is the possibility with this bullish breakout above SPY 417 that we are going to push higher to close these gaps above and possibly even push as high as the 430s. Now, after that happens, there's increased risk that we're coming down to fill the gaps below. And even though I don't know exactly how low we will go, we do have gaps all the way down here at 396.5. Now, the other thing to pay attention to is the 200 daily moving average is starting to flatten out and it no longer has a positive slope, because if you go back 200 bars from the close on Friday, that was back when we were starting to get those August highs. So it is possible the 200 daily moving average starts to have a negative slope over the next couple of days. Whether or not you think that is significant is totally up to you, but a positive sloping 200 daily moving average is a buy signal. And if it starts to get a negative slope, that could trigger some selling pressure just from simple things like algorithms. So just don't rule out the possibility that even if we do go higher in the next couple of days, and I do think there is a good chance we are going higher in the next couple of days, that could be met with very high volume selling as we start down that path to fill the gaps to those lower prices. So just quite simply said, consider locking in a lot of your profits as we approach critical resistance, because you can always get back into those positions once price action breaks through resistance and proves that we're going to even higher prices. So my personal plan is to lock profits as we go higher, because I am still bullish on this market while SPY is above 417, and you have to take very little risk to stay bullish with that risk level. If we break down below it and we start losing the support trend line and we break below 417 and 414, you could take a very small loss and then you can get out and wait until we see where we find support. However, if we're going higher in the short term and you're just sitting in short positions or cash and you're missing out, that could really start to give you FOMO if we do get the bull breakout and continue to even higher prices. So just have a trade plan ready for any scenario, and do respect the fact that we are in a bull trend, which is evident with the price action above all the moving averages, and we still have all of the moving averages stacked in the bull's favor. So just stay very objective and have a very strict plan, and make sure that plan is all around following price action at these critical levels. So there's really only 3 levels to the upside I'm paying attention to. It's 421, 425, and 430. And to the downside, I'm watching critical support at 417, 414, and then this previous daily low right around 410. If we start breaking below all of these critical support zones, I'm instantly getting a lot more bearish because I do think we'll head back down towards 400 or even the gap close at 396. It's not my opinion on whether or not we're going there. I'm going to let the price action do all the talking, which means we need to see it in the price action before we assume anything is happening to the downside. The chart is still telling us we're going higher, which tells us to expect higher prices. On the Nasdaq 100 triple Qs, we were up 2.56% on Friday, and we did fully hit that price target at 348.5. And I'm also placing the big bad bear right there, right around 350, because I think we're getting way too far overextended at a critical resistance. Now, there is the slim chance SPY can go higher even if the Nasdaq 100 is going slightly sideways to down, which is exactly what I expect the triple Qs to do because they just are getting way too far overextended. I did a whole entire video on this on Friday, so I'm not going to talk about it again. But I do think there's a good chance the big tech sector is going to start cooling down. That means you have critical resistance at 350 with the possibility to come all the way back down towards 337 and the gap fill at 333. Critical support will be 333 because if we break below that, that will be a lower low below the previous daily close, which means we could come back down towards the 320s. Now, with that being said, this is still a very strong bull trend. I simply think it's overextended and due for a cool down. I'm not going to get bearish on the fact that we're losing the bull trend. I simply think we need to come back down and test critical support. So make sure you understand what I'm talking about. I still think we're going higher in the longer term, but in the shorter term, I think June is going to be very difficult for the tech sector. And I think there's a very good chance we're coming down to at least the 330s. Now, if we do start to break above 350 and we continue this parabolic route, the next upside target will be up there at 360. Also pay attention, we have decent volume to the upside. So when you're getting buying volume like this and you're breaking through critical resistance, it is possible the market can continue to climb higher. On the Dow Jones, we were up 0.94% on Friday, and we had a very strong bounce on increased volume off of that 200 daily moving average. So this level at 327 is exactly where you want to manage your risk if you're a bull in the Dow Jones. If we break below 327, we'll be looking for the gap fill at 322, and upside critical resistance is at 333 and 336. If we break above 336, this will look like a bull flag breakout, which means we're likely going all the way back up towards 346. But I would wait for that confirmation of the break of that critical resistance. On the Russell 2000 IWM ETF, we were up 1.14% on Friday, and we're sitting right here at critical resistance yet again at 176. If we break critical resistance, we'll be looking for gap fills above 177 and then a gap fill up here above 181. Now keep in mind, in the Russell 2000, we do have this negatively sloping 200 daily moving average, and the last time we tested it, we had a strong rejection. So we are still in a longer term downtrend, and we still have a gap to fill to the downside at 171.56. The extremely bearish scenario in the Russell 2000 is this head and shoulders pattern on a breakdown below critical support at 170, but it's not a head and shoulders until we get confirmation of the price action closing below that neckline. So there's going to be critical support between 170 and 171 and critical resistance at 176 and this negatively sloping 200 daily moving average around 180. On the ARKK ETF, we were up 1.88% on Friday, and we're still getting rejected from that critical resistance, which means we could be coming down here to fill gaps below 36 and 32. So don't get bullish on the ARKK ETF until we can clear through this critical resistance zone between 40.5 and 41.5. On the VIX, we were down 2.45% on Friday, and the VIX continues to crush every time it hits 20, and this is exactly what you expect to see in bull trends. Last time the VIX hit 20, we crushed, and we just hit 20 again, and we're starting to crush yet again. So we need to see the VIX starting to close above 20 before we get more bearish. On Bitcoin, we're currently down about 0.68%, and Bitcoin is trying very hard to hold that critical support zone at 27,000. And I do think this bounce could just be another lower high before we finally break down through that support and hit my price target at 24,000. The reason I believe that is because even though we're going higher, it's on very low volume. And if this were the level to buy Bitcoin, we would see a lot more high volume buying, and we're just not getting it. We're outside the upper Bollinger Band. We're hitting resistance at 28,000, and we're still at a lower high, which is the perfect time to get a high volume rejection and hit the price target. So I do think there's a lot of downside risk in Bitcoin in the month of June until we can start breaking above this previous high at 30,000. On Tesla stock, we were up 4.72% on Friday, and we did get that strong bounce off of the support at 183, and we're very close to my price target at the negatively sloping 200 daily moving average at 200, and we did hit the price target at 197. So as I've said before, even if Tesla is going lower, I think it is going to test that 200 daily moving average first. And then if we get a high volume rejection, this is going to be a lower high before the next lower low. And as you know, I'm still eyeing that gap fill down there at 146. Now, if we start breaking back over the 200 daily moving average and we break this high above 208, this is going to look like this was just a pullback and we're going to the higher prices in the high 200s. So whether or not Tesla is bearish or bullish, we should know very soon because we're about to see that critical test of that resistance at 200. On Apple stock, we were up 1.41% on Friday, and we did hit the price target at the gap fill at 175, which means we could be going to that next target higher at 177. As I've said many times in Apple stock, you cannot get bearish on this stock until it loses this support zone between 170 and 171. The reason I said that is because we have the bull trend, and in bull trends, when we hit support, you don't want to get bearish, you want to get bullish. So we bounced off support yet again, which is really no surprise because that was the highest probability chance. And we need to see a breakdown below this support before we start getting bearish for the price target at the gap fill at 167. So we're bullish on Apple above 170, and we have the upside price target next at 177. On the financials, we were up 0.82% on Friday, and I think the financials are the most important sector to start paying attention to because the S&P 500 is not going higher without the participation of the financials. The big tech companies have been leading the way, but they can't lead the way forever. So if we're going to stay bullish in the S&P 500, we need to start to see the participation from financials. I'll be more bullish on financials if we can close this gap at 33 and break above that resistance zone between 33 to about 33.5. Otherwise, I'm looking for lower prices in the gap fill at 31. On the industrials, we're up 0.75% on Friday, and we did bounce off of the 200 daily moving average and close that gap, which is exactly what we were looking for. But now that the gap is filled, we still have to recognize we have a bear trend, and we're testing very critical support at 97. We're bearish below 97, and we're not getting bullish until we can clear all the way back above 101. Until we break one of those levels, treat this as a trading range, which means you can buy at support and sell at resistance. Just don't expect any strong trending. On the healthcare sector, we were down 0.2% on Friday, and the healthcare sector is still looking like a very beat up sector outside the lower Bollinger Band and way below this critical support at 130. Now, with that being said, we could find support right here, right around 127. And with this overextended condition, it's still possible to get a dead cat bounce all the way back up to 130 to about 131. Once we get there, we'll see if price action can break above the resistance or if we just get rejected from another lower high. On the energy sector, we were down 0.39% on Friday, and we still have the bear trend with the bearish price action, and I still think we're trending down here to close this gap at 73. We're not getting bullish until we can at least break above about 81. So jumping back over to the S&P 500, there is no doubt this is still a bullish chart as long as SPY is trading above 417, which is the February high, and there's a good chance we're heading into the 420s and possibly even 430. Now keep in mind, those are critical resistance, which means as we hit those levels, we will be looking for the possibility of a high volume rejection to start closing some of those gaps to the downside. We know gaps typically get filled, and we have gaps to the upside and the downside. And with the current bull trend, there's a great chance we fill the up gaps before we fill the down gaps. As always, have a trade plan and manage risk at these critical levels, and have a trade plan prepared for either scenario, so that way you let the price action do all the talking and you'll know exactly which scenario is playing out and exactly how you should be trading it. If you don't have a plan, then you're planning to fail, and you'll never have profits trading if you aren't making a plan that is built around risk management. So don't forget to take advantage of the Memorial Day sale where you could get 50% off bank trade alerts and the Stocks Channel Discord. And also don't forget about TrendSpider's deal with a 7-day free trial and up to 50% off their plans as well. You can find out how to join the Stocks Channel Discord or bank trade alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.